Want to protect your money from inflation and diversify your portfolio? You don't need to buy physical gold bars or silver coins anymore. I'm going to show you exactly how to invest in these precious metals right here in the Philippine stock market, with just a few clicks from your phone. Stay with me because by the end of this video, you'll know the exact steps to take and which options work best for Filipino investors. So let's talk about why gold and silver matter in the first place. For thousands of years, these precious metals have been stores of value. When paper currencies lose purchasing power, when stock markets crash, when economies face uncertainty, gold and silver tend to hold their ground or even increase in value. We've seen this happen during the 2008 financial crisis, during the pandemic in 2020, and during various economic downturns throughout history. They're what we call safe haven assets, and having some exposure to them can really help stabilize your portfolio during turbulent times. But here's the problem with traditional gold and silver investing in the Philippines. If you want to buy physical gold, you're looking at paying premiums above the spot price, sometimes 10 to 15% more. Then you need to worry about storage. Are you going to keep gold bars in your house? That's a security risk. Rent a safety deposit box that costs money every year. What about insurance? And when you want to sell, you need to find a buyer, verify authenticity, and you might sell below market value. Physical silver has all these same problems, plus it takes up even more space because it's less valuable per ounce than gold. It's honestly a hassle that most people don't want to deal with. That's where the stock market comes in. You can get exposure to gold and silver prices without ever touching a physical coin or bar. Let me break down the different ways you can do this in the Philippines. And I'll give you the pros and cons of each method so you can decide what works for you. The first method is investing in mining company stocks listed on the Philippine Stock Exchange. This is the most accessible option for most Filipino investors because if you already have a stock trading account, you can start today. The SEA has several mining companies that extract gold, silver, copper, and other metals. The biggest names you should know are Philex Mining Corporation, which trades under the ticker symbol PX, and Apex Mining Company, ticker symbol APEX. Philex Mining is one of the oldest and largest mining companies in the Philippines. They operate the Padcoal mine in Benguet and the Silingon project in Surigao del Norte. Their primary products are gold and copper. Apex Mining, on the other hand, focuses primarily on gold production from their Maco mine in Davao de Oro. When you buy shares in these companies, you're essentially betting that gold prices will rise, which should increase their revenues and profits, leading to higher stock prices. Now, here's what you need to understand about mining stocks. They don't move exactly in line with gold and silver prices. Yes, there's correlation, but these are operating companies with their own challenges. They have production costs, labor issues, equipment maintenance, regulatory compliance, environmental concerns, and management decisions that all affect their profitability. A mining company could face a strike, equipment breakdown, or geological challenges that hurt their stock price even when gold prices are soaring. On the flip side, a well-managed mining company that discovers new reserves or reduces costs could outperform the metal prices themselves. You also have companies like Lepanto Consolidated Mining, ticker LC, which produces both gold and silver along with copper. Then there's Nickel Asia Corporation, ticker NIKL, though they focus more on nickel. Their stock still gives you some exposure to the precious metals sector. Each of these companies publishes quarterly reports that show their production volumes, costs per ounce, and financial performance. You should absolutely read these before investing. The second method is through international exchange traded funds, or ETFs now. This is where things get really interesting. ETFs are investment funds that trade on stock exchanges just like regular stocks, but they hold a basket of assets. For precious metals, there are ETFs that actually hold physical gold and silver in vaults. And the ETF price tracks the metal's price very closely. The most popular gold ETF is called SPDR Gold Shares, ticker symbol GLD, on the US markets. For silver, there's the iShares Silver Trust, ticker SLV. Here's the challenge for Philippine investors. The PSE doesn't have its own gold or silver ETFs yet, which is honestly a gap in our market that I hope gets filled soon. However, several Philippine brokers now offer access to US markets, where these ETFs trade. Brokers like KL Financial, First Metro Securities, and BDO Nomura allow you to open US trading accounts. This means you can buy GLD or SLV directly, and you'll be tracking gold and silver prices very closely without the operational risks of mining companies. The advantage of ETFs is simplicity and precision. If gold goes up 2% today, GLD will go up very close to 2%. There's no guessing about mining operations or company management. You're purely playing the metal price. The downside is that you need to convert your pesos to US dollars, which means you're also taking on currency exchange risk. If the peso strengthens against the dollar, that could eat into your returns even if gold prices rise. You also need to consider the foreign exchange fees and the slightly higher complexity of international investing. Let me walk you through the actual process of getting started with each method. If you're going the PSE mining stocks route, first you need a trading account with any CO-credited broker. Popular choices include Cal Financial, BDO Securities, PhilStocks, BPI Trade, and many others. Most of these have mobile apps now, making trading super convenient. The account opening process usually takes a few days to a week. You'll need to submit valid IDs, proof of billing, fill out forms, and attend a brief orientation either online or in person. Once your account is approved, you fund it through bank transfer or over-the-counter deposit. Then, using your broker's trading platform or app, you search for the ticker symbol of the mining company you want to invest in. Let's say you want to buy Philex Mining. You search for PX, check the current price, decide how many shares you want to buy based on your budget, and place your order. The minimum order is typically one board lot, which for most stocks is 10 shares, though this varies. Factor in broker fees, usually around 0.25%, and taxes. Your shares will appear in your account once the trade settles in 3 trading days. For the international ETF route, through US market access. The process starts similarly, with opening an account with a Philippine broker that offers this service. You'll need to complete additional paperwork for foreign trading privileges. Once approved, you fund your account with US dollars. Some brokers allow you to deposit pesos and they convert it for you, while others require you to have dollar deposits ready. Then you trade GLD or SLV just like you would any US stock. The trading hours follow US market time, which is nighttime here in the Philippines, so you might be placing orders in the evening. There's actually a third option I should mention for more advanced investors. And that's through mutual funds or unit investment trust funds that have exposure to precious metals. Some Philippine fund managers offer funds that invest in global commodities, including gold and silver. BDO, BPI, and other banks have these types of funds. The advantage here is professional management and easy diversification. You're not picking individual stocks or timing the market yourself. The fund manager does that for you. The downside is management fees, which typically range from 1 to 2% annually, and you have less control over exactly what you're invested in. Now, let's talk about strategy, because owning gold and silver isn't just about buying and forgetting. You need to think about position sizing, timing, and rebalancing. Most financial advisors recommend that precious metals should make up about 5 to 10% of your total investment portfolio. They're meant to be a hedge, not your core holdings. Your core should still be diversified stocks, bonds, or index funds that have growth potential and pay dividends. Gold and silver are insurance policies more than growth investments. Timing is tricky because nobody can perfectly predict when gold or silver will rise or fall. However, these metals tend to do well during certain conditions. High inflation benefits gold and silver because they retain value when currency doesn't. Geopolitical uncertainty, wars, and political instability drive investors toward safe havens. Economic recessions often see gold prices rise. Low interest rates make gold more attractive because you're not giving up much yield by holding a non-interest-bearing asset. When you see these conditions developing, it might be a good time to increase your precious metals allocation slightly. Dollar cost averaging works great with precious metals. Instead of trying to time the market perfectly, invest a fixed amount regularly, maybe monthly or quarterly. This way, you buy more shares when prices are low and fewer when prices are high, averaging out your cost basis over time. If you're investing in mining stocks, pay attention to their quarterly reports and production updates. If a company consistently misses production targets or faces cost overruns, that's a red flag. One important thing I want to stress is the difference between investing and speculating. Investing in gold and silver for portfolio diversification and long-term wealth preservation is smart. Trying to day trade mining stocks or time short-term moves in gold prices is speculation and much riskier. Most people lose money trying to trade short-term. If you're new to this, stick with a buy and hold approach with regular rebalancing. Let's also address some common mistakes Filipino investors make with precious metals. First mistake is going all in. I've seen people put 50% or more of their money into gold because they read some article predicting economic collapse. That's not diversification, that's concentration risk. Second mistake is buying physical gold from unverified sources. If you must buy physical, only go through reputable dealers like Metro Bank's Gold Coins or Bullion Star Singapore. Third mistake is ignoring the costs. Factor in all fees, spreads, storage costs, and taxes when calculating your returns. Fourth mistake is panic selling. Gold and silver are volatile. If you sell every time the price drops, you lock in losses. These are long-term holdings. Also consider tax implications. In the Philippines, stock gains held for more than 12 months are not subject to capital gains tax, though you pay transaction taxes. For mining stocks on the sea, you're subject to the same rules as regular stocks. For international ETFs, different rules may apply. And you should consult with a tax professional if you're dealing with significant amounts. So, what's my recommendation for Filipino investors just starting with gold and silver? If you're a complete beginner with a modest budget, start with mining stocks on the sea. They're accessible, you can start small, and you'll learn how these investments move. Put maybe 3 to 5% of your portfolio into one or two of the established mining companies I mentioned. As you gain experience and your portfolio grows, consider adding international ETF exposure for more precise tracking of metal prices. Diversify across both gold and silver if possible, as they sometimes move differently. That's everything you need to know about investing in gold and silver through the Philippine stock market. You now understand why these metals matter, the different ways to invest in them, the step-by-step process, and the strategies to use. Whether you choose mining stocks on the PSE or international ETFs through US market access, you're taking a smart step toward portfolio diversification and wealth protection. Remember, these are meant to be steady, long-term holdings that balance out the riskier parts of your portfolio. If this video helped you, hit that like button and subscribe for more Filipino investing content. Drop a comment telling me if you're team mining stocks or team ETFs. And hey, if you have friends who keep asking about gold investing, share this video with them. Thanks for watching, and I'll see you in the next one, where we'll talk about building a complete, balanced portfolio. Hanggang saya muli.